in today's video, I'm going to cover the whole entire market in terms of S&P 500, Nasdaq, specifically the ETFs, SPY for S&P 500 and QQQ for Nasdaq. I'm going to cover economic calendar, 10-year treasury, crude oil, and so on and so forth. So hopefully you guys like the video. Hopefully you guys enjoy it. If you do, consider dropping a like. It does help with the channel. So thank you so much for that. Before I get into technicals in terms of price actions and support and resistance, I'm going to cover the economic calendar, then 10-year treasury, and then crude oil, and then go into the technicals. So in terms of Monday, May 13, 2024, at 9 a.m., Fed Vice Chair Philip Jefferson and Cleveland Fed President Loretta Mester together on panel at 9 a.m. And now the big thing is, though, too, on Tuesday and Wednesday, we got the PPI and CPI numbers coming out. That's inflation numbers. The significance of that, the main thing, is that if inflation comes higher than expected, there's more likely of a chance that the Fed will not cut interest rates, and the market's anticipating or hoping, actually, in my opinion, for one interest rate cut. So because of that, if inflation is still not coming down, hypothetically higher than expected, less likely a chance, and the market will react negatively to that. Like always, by the way, I'm not a professional, so please do your own due diligence and research before buying and selling. In terms of 10-year treasury, we're at 4.5%. And then for crude oil, we're at $78.20 per barrel. Again, the reason why I cover crude oil too is because energy was a big factor for inflation. In terms of PCE number, the Fed looks at the core number, so energy is taken out, which is it makes sense a little bit, but at the same time, inflation would be a lot higher if you included energy. But the reason why they don't is because they say it's volatile, which it is in a way, right? So hard to account for it. But either way, it's here in terms of the ETFs, specifically QQQ first, and then I'm going to cover SPY. We've closed at $442.06. Now we have, in terms of the 5-year and 1 year, so the 1 year is already in the bullish movement. The 5-year long term, it's trying to curve up to the bullish movement. It's in bearish territory for the time being. But hypothetically, in terms of more predominantly for the S&P 500, it is expected to go to the upside. For Nasdaq slash QQQ, hypothetically it is, but it's going to have to do a breakout. So like I've shown in the past, so for new viewers, we have an upward trend resistance line dating back since 2010, an upward trend support level. So basically stuck within this channel. Same thing with S&P 500, I'm going to show soon. But we broke out through 2020 and 2022. Now for the S&P 500, we did not have a breakout. And then we came back underneath it, got knocked down, and hypothetically bounced back up. And the question is, are we going to continue to the upside? Now, even if we do, that creates new all-time highs, by the way. So if you can see right here, we're pretty much at the edge of new all-time highs. And then even if we go up, we will test this upward trend resistance line, and it depends if we break out or not. Now for the S&P 500, we're not that close to the 2010 upward trend resistance line, so we have more room to grow. But either way, so I'm going to cover the 3-month. Now the 1 month, 3 month, and 6 month for the S&P 500 and Nasdaq, they're all showing downside for Monday, basically, for the most part. This is just the technicals, though. So fundamentals could always change that. For example, if anything happens over the weekend, tension in the Middle East, or in terms of what the Fed says at 9 a.m., in terms of the speakers, anything could happen, right? So that could just change the course of Monday. But at the same time, again, we have CPI and PPI numbers Tuesday and Wednesday. So in my opinion, by the end of the day of the market, it's going to most likely come down, right? So we might spike up on Monday from morning to like midday, closer to the end of the day. But at the end of the day, I think we're going to close down, like not close necessarily low for the day, like in terms of the negative, but the market will come down towards the last 30 minutes of the trading day. Now, to break it down in terms of support and resistance levels, we have this upward trend resistance slash support level. We've seen touch point right here, in terms of resistance, support, resistance, and then we've seen resistance and resistance. So technically, we could climb up. I've seen horizontally, if you look right about here, a bunch of touch points just goes up, 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 up. Like if I draw horizontally, just going to be a rough like draw. So nothing crazy. You can see touch point, touch point, touch point, touch point, touch point, and almost a touch point. These are just a rough drawing, but essentially, if it were to climb up all the way through when I calculated it, it hits the $446 price point, and then there is a gap of resistance between 446 and 448. So I personally do not expect to see us pass 448 on Monday, especially since the inflation numbers are coming the next day. And then we have the all-time high around $450. So that would for sure, in my opinion, if we pass it, I'd be shocked personally, but anything could happen, but I don't expect it, to be honest. So I'm not expecting to pass 448. If not, not, to be honest, we might not even pass 446 and some change. Again, because the inflation numbers are the next day. Now to the downside, basically what we have is, it kind of refreshed, I'm not sure, but in the downside, we have this downward trend resistance line that could act as support. Haven't really seen it act as support, to be honest, but if it does, we're looking at the low side for Monday, right about here. It's about $439 and some change. So basically 440 and 439. If we bounce off moving average, we're looking at $440.80, 438 and some change. So basically around this price point, it kind of makes sense where we're not going to break down this range area. So between 438 to 441, basically it looks like, yeah, 441. So 438 to 441, we might just come down and then basically bounce by the end of the day. So even if we spike up, let's just say 444 and some change, or 446 and some change, I do not think we'll see 448, but whatever. If we do, whatever, like at the end of the day, come down, and we're most likely going to either stop somewhere between 438 to 441, somewhere around there. Now, if we were to go to the drastic downside, because again, the 1 month, 3 months, 6 months show to the downside, and it might not even spike up on Monday, then what we're looking at is hopefully support between the 438 to 441, like I stated. But then ultimately, there is support at 435, 434, right? If you look horizontally right here, there's a bunch of touch points between the 434, 435. But if we were to come down drastically, I think we'd probably end up touching. This is just based off because all 1 month, 3 month, 6 month are all showing with the MACD line showing bearish movement. If the volatility index spikes up, which we're at 12.56, then we could be seeing 432, 433 range, 433 and some change, 432. So around that, which collides with the moving average as well. Now, that would have to be drastic. It would have to be by the end of the day. I don't see it happening early to midday personally, but that's that. But that's for Nasdaq / QQQ. And in terms of SPY, which is the ETF for the S&P 500. Now we have the same thing with the 5-year chart for the new viewers, just in case. Upward trend resistance line dating back since 2010, and then we did not break through it. Just like for Nasdaq, we broke through it, but S&P 500 did not break through it. Upward trend support level and upward trend support level for major crashes. Now, like I stated, we have a lot of room to grow, and again, the thing is though, we're pretty much at the all-time highs almost. Like we closed at $520.84. The all-time high is about $526. So we're pretty much right there. And then the same thing with the S&P 500, just like the Nasdaq. The 1 year shows we're in bullish movement, but the 5 years showing that we're in bearish, but try to cross over. But we have room to grow versus Nasdaq, which doesn't have room to grow, but it did break through the upward trend resist. So we'll see. But the 1 month, 3 month, and 6 month, just like the Nasdaq, is showing downside for Monday. So that's just on the technicals, right? Again, just like I stated for Nasdaq, anything could happen over the weekend in terms of, like, for example, like let's say tensions, which would bring the market down though, but tensions in the Middle East, or by Monday, 9 a.m., the Fed speakers say something that alters the market to the upside, or maybe just continues it to the downside. And then again, the volatility index is on the low side too. Again, 12.56 for the volatility index. Now, if we go to the 3 month, even though they're showing to the downside, we have this downward trend resistance line that we did break through, and then this upward trend resistance line that's pretty much capping us for the most part. Not the greatest line, I apologize for that. But if we were to head to the downside to follow the technicals, and I'll cover the upside, I think the upside is pretty much going to be capped by this upward trend resistance line that we've seen multiple times anyway. So for Monday, I'll just cover that for now. We're looking at $524 and some change, which I think pretty much would, because we're so close to all-time high, I think the market might just push us and have a false breakout anyway at the $526 price point and some change. I kind of feel like that might happen, false breakout, and then bring us back down. And just like I stated for Nasdaq, what's going to happen, in my opinion, because we have the CPI and PPI numbers coming out on Tuesday and Wednesday, by the end of the 30-minute trading day, or at the end of the day, 30 minutes of the trading day, the last 30 minutes, I think the market will come down. Maybe sometimes it's like the last 5 minutes or 15 minutes, but either way, will come down. And then that will be like, for example, if we go up, false breakout, and then start coming down by the end of the day, that's when we'll hit the lower levels. So if you want to know the high side, just in case, so yeah, 524, and then potential false breakout, 524 and some change, by the way, and then potential false breakout to 526. I don't think we're going to go higher than that. If we do, again, I apologize just because I think it's going to be hard to pass the all-time high when the next day's inflation numbers coming out, right? But to the downside, we're looking at support. So the moving averages coincide like perfectly with the horizontal resistance levels, which is kind of crazy. But at 518 and some change, we have support there with its moving average plus horizontal. Then the 515 and some change, right, coincides with horizontal and moving average. And then we have about $510. Now, the $510 is tricky because we have a gap of 511, 512 support. But then the 510, we do have support, but the 510 doesn't tend to hold that much. It's pretty much around between the 509, 508, 510 range. I hope we don't break through the 507. Let me see if that's going to be an issue still. Yeah, okay. If we hit 507, technically it's fine. I don't personally think we're going to see that. But the reason I'm mentioning the 507 is we might come down and bounce off this downward trend resistance line as support. Again, I personally don't see us coming down that much. That'd be a massive drop. When I don't think inflation numbers are going to come that high if they do come higher than expected personally. So I don't think the market's expecting high inflation numbers. So because of that, I don't think we'll see 507. I think most likely what's going to happen is to the downside, if we don't spike up and we actually just follow technicals, then I think 515 will for sure, potentially, not for sure, could definitely be in play, right? And then the lowers, like say 512, 511 could potentially be play, and 510, but those, in my opinion, would be closer to the end of the day. I don't think by morning to midday we'll see those low numbers. It's more likely we're just pretty much going to consolidate, let's say 518 to the 524, and then by the end of the day drop down potentially to 515 and some change potentially. But yeah, that's basically it for today's video. Hopefully you guys liked it. Hopefully you guys enjoyed it, and I'll see you guys in the next video. Thanks again. Take care. Peace.